Welcome to this video where I describe a personal cash flow forecast and show how to create it. As a professional accountant in industry, I spent a great deal of my career producing cash flow forecasts. They are an essential tool for ensuring the continued health of a business and to warn of potential problems if certain courses of action were to be followed. A cash flow forecast for individuals is no less important. I've created a cash flow forecast for my personal use that I update on a more or less monthly basis. Being aware of what lies ahead, one can plan and in doing so avoid any nasty surprises. This is my Excel spreadsheet. Before being able to create a cash flow forecast, one needs a knowledge of one's income and expenditure. One instinctively knows the basics: monthly salary, mortgage repayments, rent, etc. But for an accurate cash flow forecast, you need to know income and expenditure in a fair bit more detail. To allow me to do this, I downloaded a year's worth of transactions from my current account as a CSV file and then used Excel to sort the data into a number of different sequences. Large to small, which was quite instructive, by payee, by date, by transaction type. I discovered that about 90% of my expenditure was fairly predictable on a cyclic basis. Cash flow forecasts would be easy if receipts and payments were all on a monthly cycle, but they're not. I discovered that there were a number of other cycles, mainly associated with payments, but also a few receipts had irregular, non-monthly frequencies. In summary, I found that receipts and payments normally followed one of these cycles: monthly, quarterly, annually, weekly, fortnightly, 4-weekly, or 6-weekly. And I also discovered that the types of receipts or payments could be categorized as either standing order, direct debit, regular card payments, other regular payments, and of course irregular payments. Armed with this information, I decided to use 3 basic periods that could then have a frequency associated with them: yearly, monthly, and daily. For example, daily with a frequency of 7 would work for weekly, with a frequency of 28 would work for 4-weekly, and with a frequency of 42 would work for 6-weekly. Let's have a look at the cash flow forecast again. And this is how it works. Across the top in the column headings, I've got dates, and they spread across for about the next 6 weeks. Then in column B, I have a description of either the income or expenditure, the regular amount, the repeat frequency, the period, and a base date. And then based on this, there's a formula on each intersection of row and column, which looks quite scary, and we'll come on to that a little bit later. But that looks to see if the date at the top of the column coincides with a base date and the frequency and period, and if so, it puts the amount in. If it doesn't, it leaves it blank. Expenses are entered as negatives, by the way. So this example, charity, happens to be payable on the 1st of the month, and it's repeated every month, and therefore the 1st of April coincides with the base date of the 1st of January 2023. Similarly for rent, that's always payable on the 1st, whereas broadband monthly is payable on the 2nd, and therefore that appears in the column for the 2nd of April, and so on and so forth. At the bottom of the spreadsheet, I've got a closing balance, which in turn is the opening balance of the next day, and I have a summary sheet which I work on a week-ending basis. If we look at the daily one, because I stretch across about 9 weeks, it's quite difficult to see exactly what's happening, whereas a summary one, I have a week-ending date, a closing balance at that week-ending date, and a minimum balance, because of course the balance at the end of the week might be much higher than during the middle of the week, and here is an example of just that happening. I've used conditional formatting to highlight items where I'm likely to go overdrawn. So that's the spreadsheet. Let's look at how we can create one. Open a new blank Excel workbook. Rename the current tab to Daily. At this point, I suggest you save the workbook in a suitable location and with a suitable name. I've called mine Personal Cash Flow. If following along with this video, it's probably wise to follow these instructions as exactly as you can. I'm going to be dodging around a bit, but things should fall into place. In cell B2, enter the text description. I would highlight column B and change the width to about 20. It doesn't have to be exact. In cell C2, enter the text amount. In cell D2, enter the text repeat. In cell E2, enter the text period. In cell F2, enter the text base date. In cell H2, enter the start date for your cash flow, for example, the 1st of April 2023. In cell I2, enter the formula H2 plus 1. Starts with an equals. You can then use the mouse and then plus 1. Now copy that formula across the spreadsheet to column BR. Highlight columns BR to H and double-click on the right-hand border here to default the width to the width of the largest text. While we've got these columns highlighted, we're going to change the formatting to number, 2 decimal places with a 1000 separator. Highlight row 2 from column A to BR, and we're going to change the formatting back to date. And to make the spreadsheet look a little bit pretty, we're going to apply top and bottom borders. Select column A and format it as bold. Select column C and format it as right aligned, and we'll also format this as number, 2 decimal places and 1000 separator. Highlight columns D to F and we'll make those center aligned. Highlight column D and we'll format that as number with no decimal places. And we'll highlight column F and format that as a date. In cell A4, enter the text opening balance. In cell A6, enter the text income. And in B7, enter the description of your first source of income, for example, salary. In C7, enter the regular amount of this salary. In D7, enter the repeat frequency. This will be a number, so 1, for example, if it's every month. Period is going to be monthly, so let's put in M. And we're going to enter the base date as the 28th of January 2023. Be careful with items that are monthly and are on the 29th, 30th or 31st of the month. If you've got the 31st of the month, for example, you'll find that you get unexpected results in April because there's no 31st of April. So I find it's always best to either put the base date as the 28th of the month or the 1st of the following month. That way you don't get these unexpected problems. In cell H7, we're going to enter a formula. I'll explain this in a good deal later, but for the time being, this is it, as you can see up here. I'll also put the formula and other ones that I use later in the description, so there's no need to try and copy it down from the screen. Select cell H7 and copy to I7 to BR7. And we'll see that, for example, on the 28th of April, we've got a figure being entered, but on the rest of the row, we've got blanks. Now we need to repeat that step for all sources of income, and then once all sources of income have been added, you need to add the payments. I've chosen to categorize them into the types of payment, such as standing orders, direct debits, etc. This isn't strictly necessary. To save you watching me enter this data, I'm now going to stop the video and come back when I've got some data entered here for us. Right, I've now entered some data, and if we scroll down, leave a couple of lines at the bottom and then enter closing balance here. In cell H, and then for the row, we want to put a sum, and it'll be the sum of everything in that column. We'll also give that a top and bottom border. And we also need to copy this formula that we entered originally in H7 to the rest of the rows in this column where we've got some data. So I'll just do that. Now we need to copy the contents of column H from row 6 or 7 into all the other columns up to BR. In cell H4, we enter the opening balance from your actual bank statement or banking app. In column I, in cell I4, we enter a formula saying equals, and that'll be the closing balance from the day before. And we need to copy that across all rows. Sorry, across all columns. Of course, not all receipts and payments can be forecast precisely, so it will be necessary to enter a couple of rows along the lines of clothing allowance, out-of-pocket expenses, or sundry weekly payments, for example. Over time, you'll become more accurate in forecasting these payments, but there will always be an element of the unknown and unexpected, for example, boiler repairs or car repairs. There is little one can do for these other than to always expect them. But this is a move towards personal budgeting rather than forecasting. I have a line that says transfer to deposit, and then as necessary I can enter a figure for transfer from deposit to cater for those large, lumpy, unexpected pieces of expenditure. To make things easier to read, I'm going to apply some conditional formatting to the closing balance. So highlight the row with the closing balance on. Select conditional formatting, highlight cell rules, and if it's greater than 0, I want them to be green. Repeat, and if it's less than 0, I want them to be red. And that allows us to see quite easily where we've got problems. Finally, on this page, go to cell G3 and view, and we'll freeze the panes. That way we can scroll up and down and still keep our columns and row headings in sight. Now, there are only 2 cells that really need changing once we've got this set up. Whenever you choose to redo the cash flow forecast, you only really need to change the opening balance from your banking app and the date. So I like to highlight both those cells with a different background, just to let me know that those are the ones that need changing. So that's the basic spreadsheet. And as I say, once you've got it working and checking against your monthly expenditure, you'll find that this will be reasonably accurate. But we want to produce a summary as well. And the reason for that is mainly because this is not easy to read in all details. So to do that, click on the plus sign and we'll rename this sheet Summary. And I'll change the size so you can see what I'm doing. This summary sheet should give a bird's eye view of the forecast. So select cell A2 and we'll enter the text week ending in here. In cell C2, enter the formula equals daily exclamation mark H2 minus 1. I'll explain the minus 1 in a minute. In cell D2, enter the formula equals C2 plus 7. And then copy that across to column L. And then highlight the columns and just double click so we can see the full date. So those are the week endings. And the reason I did the minus 1 here is if you go back to the daily, the week ending is going to be on the 7th for this first week. So 1, 2, 3, 4, 5, 6, 7, which is the 7th. And by putting in minus 1, we get the previous month or previous day week ending, which is in here. In cell A4, we're going to be putting in the closing balances, but we can make life a little bit easier by naming some ranges on the daily worksheet. So we're going to do that. So go back to the daily worksheet, and the first thing we want is the heading, the dates at the top. So highlight from H2 all the way across to BR2, and then select Formulas, Define Name, and we're going to call these DateHeadings. Leave the scope as Workbook. We're now going to do something similar for the closing balances. So go to the closing balance row, highlight the whole row from column H to BR, define a name and enter it as closing balance. I haven't left a gap in between closing and balance, but I don't think that matters. And the scope is Workbook. We're now going to define names for the closing balances for the various week endings. So on the closing balance row, select the first column H and then select 7 cells to the right. So 1, 2, 3, 4, 5, 6, 7. And we're going to call that week 1. I'm now going to repeat all the way across the spreadsheet for the closing balance. I'm going to name the next 7 days week 2, and then week 3, and so on. So I'll do those off screen to save you watching me do that. Right, I've now got all those week numbers or weeks named. And if we wanted to check that, if you go to Name Manager, you'll see the various range names here, the values, and then the actual cells. That's just a double check. Back on the summary sheet, in cell A4, we'll enter closing balance, the text closing balance. And in D4, we enter this formula. Again, this formula looks quite scary, but we'll come back and explain that. We want that to be copied across all columns. And now we want a minimum balance. So carefully typing in the text minimum balance, we can now enter this formula in D6. Which just says minimum week 1. Unfortunately, we can't copy that. Well, we can copy it, but it doesn't increment the week number. So I'm going to copy it and then we're going to edit it. So that should be week 2 and so on. And I think we ought to just format those as number with 2 decimal places and comma separators. And we'll do the same as we've done previously with conditional formatting. So I'll highlight the rows and then apply the conditional formatting. I think we might just put top and bottom borders on that as well while we're here. So that's our spreadsheet. We've got a summary which shows us the balances at the end of every week, and we've got a minimum balance which can sometimes be considerably lower than the week ending balance. Next, we'll look at exactly how this formulae works and how the formulae works on the summary page. This is our key formula, and this is the one we'll look at first. It's used to calculate whether to put some data in this cell or not according to these rules up here. So this is our formula, and it consists basically of an if function. And an if function works along the lines of, if something is true, do this, otherwise do something else. And what we've got is if something here, this section from quotient to here, is true, enter the data from cell C7, otherwise leave it blank. Within our formula, we've also got this other function called DATEDIF. And the DATEDIF function calculates the number of days, months, or years between 2 dates, where the start date is given as the first date, an end date, and a unit. And the unit can be either days, months, or years. So, for example, DATEDIF 5th of March 2023 is the start date, 30th of March 2023 as the end date, and a unit of D will return 25. So in our formula here, we've got 2 DATEDIFs, which are looking up a start date and an end date and a difference, which turns out to be the base date, the current date from the heading, and the period, which is read from the period column in the spreadsheet, as one date to be calculated, or date difference, and the other date difference is the current date minus 1. And the reason for that will become apparent a little bit later. So in our example, we've got a date difference of the 30th of December 2022, the current date in the column for the 1st of April and days, and then similarly for the day prior to the 1st of April 2023, which, as it happens, comes out as 92 and 91. Again, we'll come on to exactly the reasons for this a little bit in a little while. So if we look at this in our Excel spreadsheet, using our DATEDIF function here, we're looking at the date difference between F4, which is the base date, H2, which is the current date for our cash flow forecast, and the period, which is D in E4. So we can see that more clearly here. For the next date, it's 92, and for the next date, it's 93, which is exactly what we'd expect. These dates are increasing sequentially as we go across. The next part of our formula uses the quotient function. And the quotient function returns the integer portion of a division. So for example, quotient 11, 3, i.e. 11 divided by 3, will give the result 3. Similarly, the quotient 12, 3 will give the result 4. And in our formula, this is what we've got here. So we've got the quotient, and then we've got the date difference between the base date, the current date, and the period, and the repeat, which might be 1, 2, 3, 4 for number of days or months. And we're saying, is that greater than the quotient of effectively the day before with the same repeat period? So in our case, that simple case we've just been looking at, we've got quotient 92 and the repeat, which is days, compared with the quotient of 91 and the repeat, which is the number of days. So again, in our example, if we use 4 as the number of days, we get quotient 92 divided by 4 and compared with quotient 91 divided by 4, which gives 23 in that case and 22 in that case. And then our if statement is saying if 23 is bigger than 22, then we'll be entering the data from cell C7. So let's have a look at that. So in this example, we're looking at the quotient of the date difference between the base date, the current date, using the period D, and we're looking at the quotient of where the date difference is then divided by 4. And we get these results. So we get 22, 23, 23, and as we go across, we'll see that 23 will trip over into 24. And when we get this tripping over from one number to another number, we know that the period is exactly divisible by the repeat we've got here. So for example, if I change both of those to 3, you'll see we'll get it tripping over at a different point in time. I'll just change these back to 4 before I go any further. To take this one step further, if we now fill in the actual, if we put in our actual formulae in these cells, this is the effect that happens. So when the quotient trips from one number to the next, it'll put in the value from the amount. And just to illustrate that, if I change these all to 3 again, we'll see that the £100 is moved along depending on when the number of the quotient of those repeats increases. That's rather a difficult explanation for this rather strange formula, but the good news is that it works. On the summary page, we've got 2 more formulae. This one, which is index closing balance 1, match D2 date headings 0, that calculates the balance as at this date from the daily sheets. So let's see how that works. So this is our formula. It's got index closing balance 1, match, and then some other data here. Now the index function takes this form. So it's index array, row number, and column number. And it returns the value of an element in an array selected by the row and column number indices. So what we've got here is index, then we've got closing balance is the array, the row number is 1, and the column is this match D2 headings 0. Just note that closing balance and date headings are named ranges. And for those that are being pedantic, I've got the row number in here, but closing balance was only one row. So in theory, I don't actually need that. So we're looking up the closing balance, we're looking up a value from the closing balance row on the daily sheet, where the column heading matches what we've got in D2 here. So let's have a look at that. So the match function looks up a value in an array with a specific match type. So it searches for a specified item in a range of cells and then returns the relative position of that item in the range. So we've got match, and then D2 is the lookup value, and that's going to be the date in the headings on the summary. We're then going to look up date headings in the array on the daily sheet, and the match type is going to be 0. That will find the first value that is exactly equal to the lookup value. Again, that's not strictly necessary in this particular case, but I've put it in there for completeness. So what we're doing here in the actual summary sheet is we're looking up the value of the 7th of April in the closing balance, which is on the daily sheet, and the closing balance is this figure down here, and we're basically looking up the 7th of April in the very first case. So we're getting that value from there. And so on across the page. The minimum balance is actually very simple. It just says min week 1. And if you remember, week 1 was the named ranges on the daily sheet for the various weeks. And the min function is very simple. It just returns the smallest number in a set of values. In our case, min week 1, week 2, week 3, etc. So that completes the examination of our formulae. So we've got a min week 1 here, we've got an index and match here, and on the daily we've got this highly complex but very carefully constructed formula in there. Thank you very much for watching this video. I'll follow this now with a slide with some links, including to a blog post where I give step-by-step details on how to reproduce this spreadsheet, and also some links to Microsoft documentation on the various functions that we've used. I'll also add these links in the description, together with the formula used in the spreadsheet, so that you should be able to just copy and paste them from the description. I hope you've enjoyed this video. Thank you very much for watching.